Hi, I'm Nicholas Wallwork, CEO of Redbrick and globally published author of Investing in International Real Estate for Dummies. Go and get the books on Amazon now. We'll give you lots of tips and tricks on property investing and developing lots of strategies to use in your own portfolio growth. I'm here on one of my client sites in Fleet. If you're following the channel, you'll be more than familiar with it now. We're following the journey. We're currently looking at drainage and all sorts of things. We've been looking at the wraps on the building, and I'll talk you through that on another video. So if you're interested in that, please subscribe. We've got some good tips and tricks at the end of this video, so stay tuned and hear the views of the lovely Lucy Barrett, who I am coming over to have a chat with now. We're on site. Here's the film crew. Here's Lucy, and yeah, looking forward to having a good chat with you, Lucy. Hello, welcome back to the YouTube channel.
Thank you for having me.
It's
not a show.
Let's call it the Vantage Finance show.
Yeah, let's do that. I like that.
So Lucy from Vantage Finance does all of our development deals, all of our finance, all of our lending, and we've never had a better broker in 20 years of doing property investing. So that's why we're working with Lucy on a regular basis. I wanted to ask you today about the general lending market.
Okay, yeah.
So, there's obviously several layers to that. Shall we start with development finance first?
Okay.
How are you finding that in the marketplace?
So the shorter term type finance, shorter term
bridge loans and land and development finance.
Yeah.
So can you explain what those two are and how they're used first for people just that aren't familiar with those types of lending?
So if we're talking about it sort of in the construction and property vein, I would say bridging finance is used typically whereby you're not ready to build yet. So you might be acquiring a site that needs changes to planning or new planning.
Or no planning,
and actually bridging finance has so many other uses that I could talk for hours about all the other uses. So if we try and keep
another
a bit
video.
more...
That could be our next video.
That can be the next video.
Good idea.
Maybe more just around the construction side. So people use it to acquire sites because they need to acquire them quickly or because they're not ready to take development finance yet.
Okay.
So that's the main reason on this subject anyway.
And they're a lot more relaxed. Sorry to jump in. They're more relaxed. You can lend on almost anything with bridge finance, provided there's an exit in
provided
play.
there's an exit, I mean, if you have a building that has planning issues, enforcement issues, that makes it harder because that has value implications. But ultimately, it's an asset lend, so they're looking at what does this building trade at today.
As it is now, basically.
And that's what they want to understand, and they base their lending against that, and again, looking at how easy it would be to sell it in a possession scenario. But they're much more flexible, whereas with development finance, you need to have all of your tenders and build costs ready in place. You need to have your development plan, construction plan, cash flow forecasts, everything ready to go. And you need to be able to start building really within about a month of completion, usually.
And on this site, we did all of that work.
We did very quickly, didn't we?
4 weeks to exchange, and I think 6 weeks to completion from memory.
It was a very busy.
We did all of that tendered to the point of a almost signed contract, but I think we had a letter of intent which worked well enough for the lender, didn't it? On this side?
It did.
All of that in
it was
10 weeks. Can't add up.
We had to really work around those timescales because there are a lot of things that weren't ready, and actually raising the finance in that period of time is really possible, but a lot of the time it comes down to whether the client's actually ready.
That's the
because
work for the client,
if you can say to me, here's the pack, it's all
for 10
done. No, neither did I. Neither did I. But actually the market, I suppose if we come back to your original question, the market for both of those products at the moment is very strong. So bridging finance, there is a lot of liquidity in the market at the moment. There are some great rates. Obviously it depends on what it is you're looking at. So the more complex, usually the more expensive it gets. Also the bigger the transaction, not every lender can go to certain sizes. Some of them might cap at $1 million, 3 million, 5 million. It just depends really on lending criteria. But for things which are a bit more unusual, the pricing is still good in terms of what it used to be. It's come down significantly, but right. you do have that additional holding cost if you're going to take bridging finance to sort out whatever it is you need to sort out at the beginning. But loan to values are pretty strong. Demands.
Roughly what loan to values I'd commit to you, but
it depends again on what it is. If it's let's say it's commercial with no.
Do you mind if we walk this way, guys? Try and get away from the noise. We are on an active building site, guys, so bear with us.
So commercial with no planning usually would be kind of 65, maybe 70% if you're lucky on the maximum. and they are lending then off of the current use. So one thing to factor in there is if you're buying it with a bit of hope value, if you like, because you know you're going to get consent for residential, they don't look at that until it's there in place. They don't look at that, but 65-70% on non-residential is definitely doable. We're not really talking so much about the residential end of the market, but you can get higher loan to values on less complex things at maybe 70-75%, but we're sort of focused a little bit more on the construction, building to convert, refurbishment, that end of the market. So lots of money out there, lots of competition, which is great for customers. It does really not just come down to rate though, and you know this better than anyone. You can chase, you can chase the market rate, you can chase headline rates, and people do make that mistake, but you have to ensure that it's deliverable, because otherwise, especially if you're on tight timescales, you can waste a lot of time and you can put yourself in very tricky situations.
I've seen clients this week that have gone for certain deals that they chased that headline rate and it just fell out after valuation for a silly issue that the broker should have picked up on. You know, that's when you're, you know, you guys at home that haven't got a broker yet or have used a broker on what I call vanilla deals, simple buy-to-lets, chances are they're not, excuse me, they're not at the level that you'd need to understand the complexities of a deal, especially in London development and bridging, and when you get into something that's not just a straight buy-to-let, easy mortgage.
You have to look out for the problems up front.
Look out, there's so many problems that you can encounter. So you guys know those problems and can pick the lender that you know will work with you on those problems and be sympathetic to certain types of lending, certain types of building, etc.
There's nothing worse than being caught out down the line when you spent weeks on a path with a lender and there's just a brick wall and there's no way around it. There's no way you can fix it. So we like to work with lenders who we know we can talk to, who will work with us to find solutions rather than just looking at the problems and walking away. And unfortunately, there are a lot of lenders in the market that are like that. And some clients really push us and they say, I want it cheaper, I want it cheaper, I want it cheaper. And we'll say to them, this is the cheapest rate out there. I'm nervous about whether it can be delivered. And this is a product which I think actually would be better for you. Sometimes they push us down the cheaper rate because ultimately we work for the customer, and if that's their instructions and that's what they want to do, we will of course do it. But
you can compete and match any loan out there with any other broker.
Of course we can, we have access to all the lenders, but it's just about making sure that you get the balance of deliverability and pricing.
I think that point alone, if I'm to summarise it, that point alone is why we work with Lucy and her team, because of the knowledge and in-depth knowledge of all of the lenders. Most brokers will just fill in an application form and go the cheapest rate, bang. There's a lot of thousands of brokers out there. No offence to all these brokers watching, but if you're if you're a young broker and getting into the market and you're doing vanilla buy-to-lets, that's fine and that's great for that kind of client. But if you're going anything more complex, even into HMOs can get a bit more complex with the extra regs. Anything land and development, anything conversion.
And it sounds great in your initial conversation with a customer. If I say, oh Nick, I can get you this rate and it's sub 3%.
Suck them in with a
you're
good rate.
so happy. We've had the best conversation in the world, and then a few weeks later I call you up and say, oh, they've declined it. Say, well, why have they declined it? I tell you why. He said, yeah, but you knew that when I spoke to you a few weeks ago. Oh yeah, but I didn't realise it'd be a problem. Oh no.
That's experience, I guess, isn't it?
It is experience,
Okay, well look, that's a really good update on kind of the bridge finance and development finance road. I'm going to come back to you on another video. That's why at the end of this video, I want you guys to tune into the next video on this series. It'll be somewhere in the series, just look for it on the channel. We're going to talk about buy-to-let lending. I think it's probably a good subject we talk about. So thank you for joining me on this particular video, Lucy. Please subscribe, hit the bell icon to be notified of other videos, notified of the next video where we're going to talk about the availability of buy-to-let lending and how that's looking post-COVID. I'm also offering mentoring on a one-to-one basis to a limited number of clients. So if you're interested in that, please reach out using the details below. We've got new courses being delivered. So again, the links to those will be provided in the details shortly when those have been launched in the next few weeks. And I look forward to seeing you on another video very soon. Take care. Bye-bye.